In the energy quadrant, taking a look at the June WTI crude oil futures contract, which fell almost from open to close today. The high today was 60.43, which was only up 0.02%, and the low today, 57.91, was down 4.15%. With a little bit of time left in the futures session, we're still down 3.7%. Today was the third consecutive session of lower prices, and crude oil is set to have its lowest close going all the way back to late June of 2023. Now, depending on the close today, June crude oil will either have its largest drop on a percentage basis since April 10th or since April 4th. But either way, it's a big push lower in price, breaking below the $58 mark and likely settling just above it. Good news on the global front and potentially bad news for crude oil longs. The United States and Ukraine are reportedly set to finalize a landmark critical minerals agreement. According to news reports, a representative from Ukraine is on its way to Washington, D.C. right now to sign the long-anticipated minerals agreement. This is critical minerals with the U.S., which excludes any provisions related to Ukraine's debt for prior U.S. military financial assistance. This affects crude oil directly because it is a critical step for more pressure to be put on both nations, Ukraine and Russia, to move forward with a permanent ceasefire. This could potentially allow Russia to sell their oil on the open market without the hurdles of oppressive Western sanctions, increasing the already existing oversupply in the crude oil market. There was also some important economic data that gave credence to more demand weakness developing in the future for crude oil. U.S. GDP had its first negative print on a month-over-month basis since 2022, and China's official PMI came in weaker than expected and still in contraction territory, pouring water on any hopes for a China recovery, propping up crude oil demand anytime soon.